Hey everyone, welcome back to Corporate Decoder. Today, Limitless Projects Incorporated just filed their quarterly report, and I'm seeing a few things that stand out about their financial operations. Quick note, this is not financial advice, just my take on public filings for educational purposes. This company is developing employee monitoring software, and despite having a product concept, they are still operating with very little revenue and a lot of accumulated losses. We are looking at a 10Q filing, which means it is a report filed by public companies quarterly to give investors an update on their financial performance and other important events. Limitless Projects Incorporated is the company we are digging into today. This report covers the period up until the 30th of April 2026. It's essentially a snapshot of where the company stands financially at that particular time. As of the 8th of June 2026, they had over 100 million shares of common stock out there. This is important because it tells us the total number of ownership stakes in the company. Now, let's dive into the really juicy part, the financial information. This is where we see the numbers that tell the real story of how the company is doing. First up, we have the balance sheet. Think of this as a company's financial status report on a specific day, showing what it owns and what it owes. Looking at their assets, they have some fixed assets like software and office equipment. On the 30th of April 2026, their software asset was valued at about $145,000 and office equipment at around $2,000. This is up slightly from the 31st of July 2025, indicating some investment in their technological backbone. Their total assets at the end of April 2026 were just over $157,000. That might sound small, and it is especially for a publicly traded company. For context, many small businesses will have more assets than this. Now, let's look at the other side of the balance sheet, the liabilities. This is what the company owes to others. They have accounts payable and accrued liabilities, which basically means bills they owe and expenses they've incurred but not yet paid. By the 30th of April 2026, their total liabilities were around $572,000. What is really interesting here is that their liabilities are significantly higher than their total assets. This is a crucial point. It means they owe much more than they actually own. This is a common sign of a company that is struggling financially and may be reliant on future funding. Then we get to stockholders' equity, and here we see a biggie, an accumulated deficit. This is the total of all past losses as of the 30th of April 2026. This deficit was over $309,000. This shows the company has been losing money consistently since it started. They also have something called minority interest, which is about $156,000. This usually refers to the portion of a subsidiary that is not owned by the parent company. In this case, it implies that part of their business operations are not fully controlled by Limitless Projects Inc itself. The total liabilities and stockholders' equity match the total assets, which is how accounting works. But remember that total equity is negative due to the accumulated deficit. Moving on, we have the statement of comprehensive loss. This shows the company's profit or loss over a specific period. For the 3 months ended the 30th of April 2026, they reported a net loss after expenses, mainly general and administrative costs of about $3,900. For the 9 months ended the 30th of April 2026, the net loss was around $9,900, and for the same period in 2025 it was even higher, about $16,700. This shows a continued pattern of losing money, although the loss narrowed slightly in the most recent 9-month period. Their net loss per S-share is reported as 0. This often happens when the loss is so small it rounds down, or when there are a huge number of shares outstanding, diluting the impact of the loss on each individual share. Here, with over 100 million shares, even a small loss per period has a minimal per share impact. The statement of stockholders' equity gives us a more detailed look at the changes in the owner's stake in the company. As we saw on the balance sheet, the accumulated deficit continues to grow, indicating ongoing losses. From the 31st of July 2025 to the 30th of April 2026, their accumulated deficit increased by about $10,000. Now, let's talk about cash. The statement of cash flows tells us where the company's cash is coming from and where it is going. For the 9 months ended the 30th of April 2026, their net loss was about $11,000. This is a familiar theme. However, their net cash provided by operating activities was actually positive, around $18,000. This is because while they had a net loss, changes in their liabilities, like accounts payable, added cash. Basically, they delayed paying some bills, which temporarily boosted their cash on hand from operations. This isn't a sustainable source of cash though. On the investing side, they spent about $18,000 on software development. This is where they're putting money into building out their product. Looking at financing activities, it shows zero cash flow. This means they haven't raised any new money through issuing stock or taking on debt in this period. And the bottom line, their cash at the end of the period is zero. This is a critical piece of information. Having zero cash on hand, especially when liabilities exceed assets and there is a significant accumulated deficit, raises serious concerns about the company's ability to keep operating. Let's dig into the notes to understand what is happening. The company develops computer software systems and mobile applications. Their main focus is on employee monitoring software called Privacy and Value, designed to balance employer efficiency needs with employee privacy. They had an agreement for a joint venture that fell apart because the other party didn't make a required payment. This section is incredibly important. The auditors are stating that these financial statements are prepared with the assumption that the company will continue to operate. However, they also highlight that the company has incurred losses, has a large accumulated deficit, and anticipates future losses. This leads to substantial doubt about the company's ability to continue as a going concern. In simpler terms, there is a real question mark over whether the company will be around in the near future. They need to raise capital or generate significant revenue very soon to survive. Here is that zero cash balance again, explicitly stated in the notes. Having no cash on hand when you have liabilities and ongoing operating costs is a major red flag. It points to an immediate need for funding. They are following standard accounting rules. For revenue recognition, they need to meet strict criteria before they can book any sales, like having an agreement delivering the product and ensuring the price is fixed and collectible. They haven't recognized any revenue yet. Their earnings per S-Hair is zero, which, as we discussed, reflects the tiny losses spread across a massive number of shares. They have authorized 500 million shares of common stock with a par value of $0.0001. They didn't issue any new shares in this quarter, and there are no outstanding stock options or warrants. This means no immediate dilution from new share issuances beyond what is already out there. This section is management's chance to explain the numbers and their outlook. They talk about developing software, specifically the Privacy and Value employee monitoring software that aims to balance employer oversight with employee privacy. They mention a past joint venture agreement with another company for this software that fell apart because the partner failed to make a payment. This highlights past challenges in monetizing their core product idea. Management confirms the net loss is due to general and administrative expenses related to their software product. This reinforces that they are spending money on developing and preparing to market their software, but aren't seeing any revenue from it yet. This section talks about their cash situation. They confirm that current assets are minimal and liabilities are substantial. They explicitly state they will require additional capital, likely through selling equity or debt. This confirms our earlier observation about their financial precariousness. They state they have no off-balance sheet arrangements that are material to investors. This means all their financial commitments and obligations are likely reflected on their balance sheet. This echoes the auditor's warning about their ability to continue operating. Management acknowledges the substantial doubt about going concern and the need for future financing or profitable operations to survive. Management reports that their internal controls over financial reporting are not effective. This means that the systems and processes they have in place to ensure accurate financial reporting are not working well. This is another significant concern for investors, as it points to potential weaknesses in how the company is managed and overseen. They've reviewed their controls using a standard framework, but concluded they are not effective. This is not uncommon for small, early-stage companies, but it does add to the list of risks. Here we see the certifications from the principal executive and financial officers. These are standard requirements ensuring that management believes the financial statements are presented fairly. So, what is the bottom line here? Limitless Projects Incorporated is a company with a product idea in the employee monitoring software space. However, they are still in the very early stages with no revenue, a significant accumulated deficit, and most critically, zero cash on hand. The auditor's report explicitly raises doubt about their ability to continue as a going concern, and management itself admits their internal controls are not effective. When I look at a company like this, I see extreme risk. They are in a situation where they desperately need to secure funding very soon to stay afloat. The fact that a previous joint venture failed due to non-payment from a partner is also a warning sign about their ability to execute and partner effectively. For investors, the risk of losing their entire investment is very high. The risk I am watching is their ability to secure any meaningful funding. Without it, their operations will cease. What I'm actually looking for is demonstrable revenue generation and a clear path to profitability, which is currently non-existent. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.